I will go ahead and read the first question. So it's a great one. So I have, hey, Andrew, my name's Matt. I'm 17 years old and I've been listening to your show for about a week now. I've listened to a lot of what you said, and one thing that seems very important is picking the investment type that suits you best. I've been messing around with the stock market for about a year now, and I finally feel like I've been throat punched enough, like we all do, and I've made the beginner mistakes and got them out of the way. I want to start investing about half of my paycheck, $500, into the stock market every 2 weeks. Because I have so much time for these stocks to develop, I'm not at all worried about small risks. What do you think the best strategy for me would be? I wouldn't mind spending a couple hours over these 2 weeks researching companies/ETF. So I'd really like to know what you have to say. So what are your thoughts on Matt's first part of his question?
It's interesting. So I guess, I see you smiling over there about the throat punch.
Throat punch, yeah.
If I were to start over and I was 17 years old again, it would be interesting. It's hard to say what the best strategy for anybody would be because we're all so different. And it's hard to say what kind of investor you'll be 5 years from now. It's so uncertain. So I would say right now, what's most interesting, and kind of take that path and really go down that rabbit hole and follow your curiosity and try to learn and soak up as much as you can, and then invest alongside that. I think that's a great place to start. And understanding the principles of value investing and all that has to offer as a compounder of wealth is also a really great place to start too. And it can kind of work together as you're dipping into the market.
Yeah, I would agree with that. I think he made an interesting observation trying to figure out what kind of investor you are. I think will go a long ways towards helping you and how you do with your investments over a period of time. And I think you don't necessarily need to decide exactly what kind of investor you want to be. And experimenting a little bit may help you figure that out along the way as well. But I think it boils down to a few things. So first of all, you need to be able to find investments or companies that you're going to be comfortable holding for a while and that are not going to cause you to lose sleep at night. And speculating or buying lots of wild and crazy things because you're gambling on the future is maybe not the best approach. It's okay to have a little bit of that. And especially when you're young, it probably makes it more exciting and more fun, buying the shiny objects and whatnot. But if that's the majority of your focus, then I think you're going to go back to what Matt was talking about with the throat punching, because you're going to get a lot of that. And if you're trying to avoid that, then I think trying to follow the advice and kind of the pattern that we try to advocate, which is the style of value investing. And really what that comes down to is finding a great company, whatever it may be, and buying it for what less than you think it's worth, because the company will appreciate over a period of time. And that's how you make those great returns. And if you look at all the investors over a long period of time that have done well, that has really been the focus for those investors, is buying something less for what it's valued and then waiting for that to appreciate however that long that may take, and then going beyond that. And it's a simple concept. It's not always easy to do, for sure. But I think that really boils down to trying to find those kinds of great companies. And if you find a great company that does well over a long period of time, that's really what you're buying. Is you're not buying a ticker, you're buying the company. And if you keep those kinds of simple ideas in mind, you'll do well over a long period of time. And if you're curious and want to keep learning and growing, then that's even a bigger bonus, because those kinds of things will help you improve as an investor over a long period of time. And that's one of the things that sets Charlie Munger and Warren Buffett apart from us mere mortals, is even though Charlie Munger just turned 98 and Warren is 91, 92, he's still spring chicken. These guys are still curious and still trying to learn, right? And they're still trying to grow and learn and whatnot. And that curiosity drives them. And those are the kinds of things that will help make you successful in the stock market. And it's never going to be the same every single time. And there's always going to be different situations and different scenarios. And as you've seen over the last year, Matt, you've got throat punched a little bit. I like that. I'm not going to lie. It kind of makes me chuckle, but it's kind of appropriate. And depending on what companies you've bought, there could be different levels of getting punched in the throat. So if you learn from that, those are valuable lessons. And sometimes buying the boring company is the one that's going to give you the greatest returns over a long period of time. And I know Walmart, for example, is not sexy by any stretch of the imagination, but if you had bought it 20 years ago, you've done really, really well for yourself. So it's not as shiny as sexy as something like Tesla, but you certainly would have done really, really well over a long period of time. So I'm not saying you wouldn't have done well with Tesla either, but time will tell on all that. So anyway, my point with all this is that try to find great companies, try to buy them for less than they're worth, be patient, be curious, and continue to learn. And those things will keep you in good stead as you continue to learn about investing.